All right. Today was a very volatile and very fun day trading day. And this is very typical of an FOMC day. And you can see right here in the morning, my update said happy FOMC day. Looking at the ES hourly chart, we can see a clear range that price will be bouncing around in all day long since it's FOMC today. And there will be whipsaws in both directions to hurt the majority of traders expecting a breakout trade. Trade the range, and then if we get a confirmed breakout, either the red or the green arrow, trade the breakout and do not expect a breakout, wait for the proof. FOMC day is full of range trading and whipsaws until we start the press conference. Expect volatility at 2 p.m. Eastern for the rate decision. The pause is priced in, so there's no surprises here, but it'll still be a catalyst for high volume trading. And then expect more volatility and a possible break of the range at 2:30 p.m. Eastern for the AAPL press conference. So that playbook worked perfectly today because we stayed in that range all day long, and then during the press conference we broke out of the range to the upside, and we still got the whipsaw where we came all the way back down and closed near the low of the day. This is why I tell you, if you have the ability to day trade, it is very beneficial to be day trading in this very volatile market, because all day long we were able to make multiple trades, especially while we were in the range, and then we even caught the breakout and locked profits as we came into resistance, which I'll talk about why I knew to lock profits when we look at the daily chart of SPY. So this is what we're doing each and every day on the Stock Channel Discord server. So if you want to come trade with me and get access to these updates in the morning to help you guide your trading throughout the day, then you can find out how to join my Discord server by clicking on the link in the description of this video. All right, so now looking at the daily analysis of SPY, you can see very clearly why I knew to lock profits, because we hit that resistance at 507, which is still a negatively sloping 20 daily moving average. And if you're bullish, that is where you want to continue to lock your profits every time we get to resistance until price action breaks above resistance and proves the bulls are getting the breakout. The reason for that is because we still have a valid bear scenario that if we start to break down and make a lower low down below 497, we could see SPY make that next leg lower in the 490s and possibly even the 480s. And this is the bearish scenario that you need to be prepared for, and you need to be able to react to the price action if we do indeed get the lower low breakdown. Now, don't worry if you're still bullish, you still have reason to be bullish because we still do have this higher high and the higher low, and then we had another higher high. So we do have the potential for this to be another higher low as long as SPY doesn't break down below 497. But if we break down below 497, it is going to be very biased of you if you just continue to stay long in this market, because it will look like a lower high rejection from the resistance trend line and a lower low breakdown below 497, which means this was more than likely just a little bit of a counter trend move before we continue the bear trend, which would easily take us down towards 491 to 492 and possibly even lower. So you're not coming to this video to get any clarity on market direction or trend, because we have no clarity on market direction or trend. This is a very clear wedge, and even though we are starting to break down a little bit below the bottom end of the wedge, there's still no lower low structure until we break down below SPY 497. So you know I love to keep it simple, because keeping it simple is the only way you can really follow price action. If you start to get overly complicated and you see these technical analysts with about 20 different indicators and they still have no idea where the hell the market is going, that's just a waste of everybody's time. Let the price action do all the talking and be prepared whether we go higher from here or break down and start to go lower. Remember, your job as a trader is to move like water. You couldn't care less if we go higher or lower. We have plenty of tools to make money in either direction. So manage your risk around these critical levels, which you have right here on the chart, and then trade whatever the price action is telling you. And just remember what I told you, we are still in the range, so we have no clarity if we're going higher or lower just yet. And I will warn you against just assuming we're going lower because we have this pullback. This could easily still just be a pullback to a higher low before we continue higher. So if you still don't know what it means to follow price action, you're probably sitting there thinking, yeah, he's saying it could go higher or lower. Obviously, anybody can say that. And that tells me you still don't fully understand how to trade price action, because it's not about predicting. It's about knowing your odds, knowing your risk and reward, and then reacting to price. And then once that starts to click, you are really going to start understanding what the hell this is all about. On the NASDAQ 100 triple Qs, we were down 0.72% today. And just like SPY, we did get a bounce all the way back up to that resistance at 430, which is the negatively sloping 20 daily moving average. And if you look at these moving averages, they are now in a bear trend of all negatively sloping, and they're all stacked to the bearish direction. So you could easily understand how there is a scenario where the triple Qs are coming down here to fill this gap at 407. So it's very easy to understand the bearish scenario, but I will warn you, just like I did on SPY, against assuming this has to happen. Because it's so easy to assume it's going to happen, there is the possibility the market does something differently. What I mean by that is, if you look at this breakout, the triple Qs had a bull breakout above the resistance trend line, and while they did get a rejection, this could just be a simple bullish retest before we resume the bull trend. And I do believe if this happens, it is probably going to happen by the time we get Apple earnings. And it is a very simple trade to take, because you notice stay bullish as long as we're above 418, and then get risk off if we're below 418, because that means we're likely going down towards the gap fill at 407. So I don't want to overcomplicate it. I really think it's that simple. You're watching 418 and you can stay bull above it, and then you're getting risk off below it, because if we break down below it, we're likely going to 407. I'm not even going to overcomplicate it by going into any more detail than that. I think that's all you need to know for the triple Qs. On the Dow Jones, we were up 0.2% today. So the Dow Jones is still showing that relative strength, and it has been an absolute beast above support at 377. But I will tell you, if 377 fails, it is likely going to be a very quick flush to 370. So watch 377, and if you want to stay bullish, that's your risk level. And if you want to stay bearish, you're staying bearish while we're below 385. But remember, if we break above 385, that is a very bullish breakout. That means we're likely going towards 395. On the Russell 2000 IWM ETF, we were up 0.21% today, and we did finally come up here and close the gap right around 199. Got rejected yet again from a negatively sloping 50 EMA, and yet again we are back in the bear trend with the price action below all the moving averages. But as long as we can hold support above 196 and 193, you can still stay bullish. You just need to remember, if we break down below those support zones, it's risk off, even though we will be looking for support around 190. There is no guarantee that support's going to hold, so you will need to get risk off below 196 or 193. To get bullish, we need to break this high up here at 200, and then we're looking for the gap fill above 204. On the ARKK ETF, we were up 0.83% today, and once more, a bearish rejection from the lower high resistance at the negatively sloping 20 daily moving average at 45. So we need to break back above 45 to start pushing higher towards 47. And if we can't get the bull breakout, we're coming down lower towards 41 and then 40. On the VIX, we were down 1.66% today, so even though we saw rejections in SPY and the triple Qs, the VIX did not spike today, which tells us we did not get a confirmation from the VIX that we had high volume panic selling, which tells us there's still the possibility of the bullish scenario, which is no surprise because price action has not yet confirmed a lower low breakdown. So watch the VIX very closely. 15 has been a strong support, but if we break below it, that is going to be a bullish indication. On Bitcoin, we're currently trading at 58,000, and I told you last night during the Bitcoin analysis, don't be surprised if tomorrow we're trading in the 50,000s, and here we are trading in the 50,000s below the lower Bollinger Band, and we did break down below that bouncer die support at 61,000, and I told you below that support breakdown, we could come down towards 52,000. So it doesn't mean we have to go to 52,000, but that is definitely where I'm looking to buy Bitcoin, and I do think that is a very strong support zone. But in order to get more bullish, we're going to need to see something holding as support and get some higher lows and higher highs and reverse this very bearish look of a lot of lower high rejections and lower low breakdowns. And you could even draw a channel here on Bitcoin, and you could see Bitcoin is likely going to 52,000, so I'm feeling pretty good about that. And we are seeing the volume picking up as we're starting to sell off here. So there is such thing as a flash crash in Bitcoin, so if you're buying here, be very cautious because that is very risky. So if you're buying Bitcoin as we're crashing down, just do it very lightly and very slowly and know your critical risk levels. On Nvidia stock, we were down 3.89% today, and at the open, we did gap down, so we have another gap to fill up here at 863, and we did break down below 857, and I told you below 857, we need to hold 820, and we did hold 820, so we have no clarity of if we're going to bounce from here and get a bull breakout towards that all-time high price target that I've been talking about, or if we're going to break the support and go to the lower support zones between 780 and 740, and possibly even 689. So if we're going to break down on Nvidia, we are going to need to break down below about 810 to 820, and if we break that support zone, then you're looking for 780 and 740. To get bullish, we need to break back above 857, close the gap at 863, and break the high at 880, and then we're likely going to the top of the range in the 900s. On Tesla stock, we were down 1.8% today, and we're continuing this pullback. We did not hold above 183, so it's likely we're coming back down towards 176 to 173, and there is going to be a gap just below 173 as well. So I'm going to go ahead and delete this V-shaped recovery. We've already had that play out. We've already hit those price targets, but now on the way down, you're looking for the possibility of a higher low before we continue higher towards the 200s. I do think Tesla is going to 200. I actually think it's going into the 220s. The only thing that's very difficult to predict here is where we are going to find the higher low, so watch 173 and 167. On Apple stock, we were down 0.6% today, and this is by far the individual stock name that I am the most interested in because it is a behemoth of a blue blue chip company, and it's coming into earnings Thursday after the bell, and it is getting the perfect scenario that I was just talking about last night, which is a higher low pullback into earnings. And if we can hold a higher low pullback into earnings, I think there's a very good chance we see a face ripping rally after earnings that could bring us into the 180s. And the only way you can play this is by simply saying I need to play through earnings, control your risk through position size, and these critical levels between 167 and 169. If we break through all of this support, we know we're likely going down into the low 160s, so that is a risk, and it will happen very quickly if you're playing earnings because it's either going to gap up or gap down very large amount. But I do believe this stock is getting ready to get back on the bull, and I do believe this is going to be a lot of positive momentum for the indices because, as I just got done saying, this is a behemoth of a blue chip company that is very heavily weighted in the indices. So look for this scenario to play out. It is a very exciting setup as long as you understand the risk. And if you understand the risk, you can control your risk. And now if you can control your risk, you don't have to be afraid of trading it. So jumping back over to the S&P 500, this is a very exciting market to be a day trader in. I think it's going to be very frustrating for swing traders for a few more days, and then I think we're going to break out of this range once and for all and either resume a bear trend or resume a bull trend. But while we are in that range, take advantage of the volatility, and if you have the ability to day trade, then do it because it is a very profitable thing to be taking advantage of right now. That's what I'll personally be focusing on in the Discord server. So if you want to come trade with me and get access to all of my intraday updates and technical analysis, as well as my trade ideas, that's going to be in the Stocks Channel Discord server. And you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.